everyone, welcome to Jackrabbit Trader, where we teach you how to stop predicting and start reacting. My name is Steve, and in this video we're going to take a look at the stocks to watch and the markets for the week of July 24th, 2017. Hope everyone had a great week. The markets continue to run, and with that we also continue to perform very well in the Jackrabbit Club, where we take trades based on what we talk about here. It's trading my real portfolios, my real accounts, and we've been doing pretty well. So the key here is we're looking at it from a longer term perspective than most traders do. We're looking at it from a weekly perspective versus a daily, and I think that helps you to really follow the trend, not get too chopped up with the intraday back and forth, with the daily back and forth. And actually, funny thing is, I have been tracking my performance on, let's minimize this, and I'm a big nerd, I'm a big comic book guy, so Captain America in the background. But what this is weekly versus daily performance. The S&P is the red line. Okay, so that is what the S&P has done on a closing basis every week. The blue line is my current accounts, my longer term accounts, and the green line is what I've been experimenting with from a daily perspective. Right, I was always interested in trying to build the income side as a trader. Same principles that I use from a weekly perspective. I do it with options, and I do it from a daily perspective for the green line, and you can see how erratic it is, as opposed to the blue line, where it's just a nice, smooth, easy ride, not getting too chopped up. So it is what it is. Like I said, I've always tried to experiment as a trader, see what works best, and I continue to come back to the weekly charts. It's just the numbers don't lie, and I'd rather have a smooth uptrend than an erratic one. I mean, this one move here in this account, a small account, but this was a 30% move in 2 weeks, and I've given most of it back. And again, it's really me learning as a trader, and I'm always trying to learn, and I think as a trader you should always try and learn, but I continue to fall back on my bread and butter here of weekly breakouts. And this is as of the close on Friday, on today, and we're at a 17% gain for the weekly strategy. Markets are at just about 10%, and the daily is around a 3%. So there's something to be said about trading the weeklies. And again, if you're not a member of the Jackrabbit Club and you want to see how I do it, just head on over to jackrabbittrader.com and fill out one of the email signups, and you will be on the list and get all the new videos. So with that said, let's get into the markets. First, SPY, we talked last week about it breaking out. Well, sure enough, we had the breakout, continuation higher. Not really much else to say here. We are in an uptrend. We are continuing to the upside, and markets are strong here. There's nothing else really to say. I wouldn't necessarily be shorting the markets, and you'll see in our stocks to watch this week on the side, there are no short-term trades, or short trades that are really setting up. Honestly, I didn't even look at them. It's not even worth it. Just because how strong the market is, there's no point in trying to go against that trend. Go with the trend. All right, trend is higher, and go with it. Here on the Qs, all right, talked last week about a nice reversal off this 137.45 area. Sure enough, that reversal has led to a breakout. So if you're looking to get involved in technology, just same as I told you last week, if you want to get involved in the markets themselves, could have just bought the SPY. This week, you want to get involved in tech, just buy the Qs. All right, Qs on a breakout here, stop 137.50. The Dow, has continued to just work higher. It's been doing so. It's been the biggest outperformer out of all the markets here. But you could see this week, inside week, just had a nice big week last week, and this week really didn't do much. So whether that's an exhaustion or not, I don't think so. I think right now we have 4 out of the 4 markets breaking out to the upside. If you look at the IWM, sure enough, earlier this week it was much higher, but a breakout nonetheless. Again, you want to use the candle closes. You want to use the these 4 highs across the board here. Let's stick with those 1, 2, 3, and 4. And sure enough, a marginal close outside of that consolidation. So again, all of these are viable trades. They're all ETFs. So you want to just trade those and not go with the individual markets. You're more than welcome to do that as well. Looking at sectors, we'll just run through them real quick. XLV, all right, just continues to work higher. Another new breakout on the XLV. If you're trading it, you can go ahead and just easily trail that stop rate up. Or if you want to get long it or add to it, 79, I would say, is your new stop level. XLF, all right, continues to just hit that 25 area. You can see we talked about it last week, since has pulled back. But honestly, looking at this, it hasn't had a big, strong pullback, all right? It's just really consolidating. So if the market stays strong and the financials can manage to break out, this market could run for a little bit of time here. XLB broke out last week. This week, not so much going on. Really a doji pattern, closed pretty much where it opened. So not much to do there. XLI just continues to work higher. All right, so those are the 4 that are outperforming the market, or the SPY, I should say, over the last 30 days. Then we have the SPY, which we talked about, breaking out to new highs. XLY, consumer discretionary, bouncing off this 88 level. So maybe that wants to go ahead and revisit those highs. We actually can remove this drawing. You see it a little bit better there. The XLE continues to break down. All right, tried to get above this downtrend line, didn't work out. And you can see, big topping tail here. So see if this continues to break down or if this turns around and starts moving higher. XLK, again, similar to the Qs, just really breaking out. All right, so this is another one. If you don't want to buy the Qs, you buy the XLK. And that would have a stop around 54.50. XLU, strong reversal. All right, had this big 1, 2, 3 down weeks, a bit of an inside week, and then sure enough, a move to the upside. All right, so you want to get long this. This is more of a pullback. I would use your stop maybe you want to pick the low, call it 51. Just size your position a little smaller. And here we have the XLP, which again had this 1, 2, 3, 4, 5 straight weeks to the downside. Hit support with this nice hammer pattern that we had discussed last week. And sure enough, this week, continuation. So one of the things we were kind of toying with is the idea of maybe a head and shoulders pattern where you have a left side, a head, and a right side. And all that really means is you have a high, a higher high, and then a lower high. All right, and then you would have to see a breakdown below 54.50, and then it's a technical pattern. And then you would have a measured move to the downside, probably 57, 54, somewhere in the 51 area. All right, I'm not really big on the measured moves, but that's how that will work. And sure enough, if you think about 51, that kind of lines up almost perfectly with these areas here. So it's amazing how, again, the more I continue to do this, the more everything always seems to line up one way or another, and it almost looks like somebody purposely did it. But again, markets are strong. I can't say anything else about it. They really just continue to work, and as I said, if we can get the financials to join tech, then this thing may run for a little bit here. Speaking of tech, let's take a look at a few names. Again, a lot of, if you look at the watch list over here, let's see, we have 1, 2, 3, 4 tech names, 2 consumer discretionary, 2 industrials, 1 energy, and then Amazon, which if you want to consider it discretionary or tech, that's up to you. But you know, the tech names have really been the ones driving this market for a while, and they continue to do so. So ACN, we talked probably a few weeks ago about a breakout. Sure enough, that breakout hasn't worked, but now here we are yet again on another breakout, right? So you take the high, you take the candle close, and there you are. There's your box and your new stop around this 122. So you could see a new closing high here at 128.85. And if you were long from this original one, well, this is the opportunity now, at least in my playbook, the way I would trade this, that I would actually go ahead and add to my position and trail that stop up. So because originally we started out with such a wide stop, now the stop has come up, allowing us to add to the position, even though the stock hasn't moved, but now you're positioned more appropriately, maybe from a position size standpoint, and you're using a stop that's a little bit tighter. ADBE, this is one that I traded very well. I really caught the bottom down here, and then I think I took it off around the 138 area. Sure enough, it's just consolidated and now breaking out again. So this is one I may look to get back into. Problem here is you have a pretty wide stop. You know, you go from 149, 135, so you're looking at about a 10 to 11% stop. And again, this is kind of similar to what we talked about in ACN. Your position size is just dictated by your stop. You know, you'll start with a smaller position, look to maybe add to it down the line. Amazon, this is one that, again, I thought I had the drawing in. There it is. It just continues to work. All right, and I've actually been long Amazon for a while. I think I've actually been long since the 887 area, and want to see maybe this week about adding to that position, but definitely trailing my stop up to 965. And again, if you're not in the trade, then this is a good spot to commit some capital and add some risk, using that 965 as a potential stop area. And here EXPD, if we actually draw this line a little bit better, okay, and you can see that we have just simply broken out. Right now 59, your stop, you know, in my, again, with my strategy and the way I trade, would have to be a 52. Some people use the breakout level. For me, that's too tight. I don't choose to trade that way, but everybody's different. You trade the way you want, but I'm just pointing out a potential breakout setup for you, EXPD, that you could look to get long. Again, an industrial name. GPN, Global Payments. This is one that probably before I started doing videos, I had identified, as you can see here, with a trigger at 86. And here we are again, breaking out from a new consolidation. So again, find the high of that consolidation, find the closing low, and let's just tweak it a little bit and say something around, what is this level? Around the 88 level. All right, so you want to get long that 93.78, stop 88, and see what happens. All right, and again, if you were long it already, look at how wide that stop was. You had almost a 10-point wide stop from 86 to 76. Now you're trailing stop up, allowing you to then add to that position. Now you only have a 5-point wide stop, so you should be able to technically, using the same amount of risk that you originally had, go ahead and double that position size and not actually increase any risk in your portfolio. IPG, Interpublic Group, again, looking at this, first thing you notice is you have a nice uptrend in place. Second thing you notice is all these wicks. All right, candle wick 1, 2, 3, 4 at the top. And let's see, where are we going to take it on the downside? A couple different spots here, but let's just draw the box as a whole. Find the closing low, and let's zoom out. All right, so there's your box as a whole, but you do have a couple options for your initial stop. One could be all the way down at the bottom, 23.50. More appropriately, I would probably be somewhere in the 23.88. So you can see we're not talking about a huge difference, but it is maybe a couple more shares than you would have had at 23.56. But you can see zoom in, 1, 2, 3, 4 lows right there, and the only time it actually has closed below that level was on this big red candle here at 23.50. All right, so that's a setup. IPG, MPC, Marathon Pete, again another energy name. As I said earlier, energy not necessarily looking the best. You can see that downtrend in place, but small pockets of strength, MPC being one of them. And here you can see, again, find the high, find the low. Okay, so the closing high, closing low. And here you have another breakout, and your stop level at that closing low is 51.43. Now I would expect to see some type of resistance when you get up to the $60 level. All right, so just keep that in mind, because that is some resistance back from 2015 in July and November. RCL. Let's see what we have here. You can see this is why I love the Thinkorswim platform, is because it has all my trade, all my drawings saved right on the platform. So when they continue to pop up, I could see what I've identified previously. You could see I had a consolidation here and a breakout. All right, and now what's happened? All that's happened is it's consolidated again, and now breaking out again. Again, another opportunity. Trail your stop, add to your position. All right, it's very simple. Trail stops, add to positions when possible. All right, and when I mean add to positions, again, you're not adding more risk. If you start out with risking 100, you're going to still risk 100. If your account value has gone up since then, and 1% is different than it was, back here, then obviously you're going to maybe have a little bit more monetary risk from a dollar standpoint, but you're still only risking whatever the percentage of the portfolio is. 1, 5, shouldn't be 5. 1, 2, half, whatever it is. Okay, WDC. This one's tried to break out many times. You can see once, twice, 3 times, and again, if you miss those, here you have another one. Now finally breaking those highs. Actually, it's not breaking highs. I'm sorry. This is coming off the list. I thought this was breaking these 3 candle wicks with a close above 95, but it's not. All right, not on the list. Take WDC off. I'm actually long, and I kind of wanted you guys to pile in and drive the stock up, but that's not going to happen here. So WDC comes off the list. We did RCL. Last one, WM. All right, and again, you can see my drawings on the chart here, but you can see there's a long-term trend. Goes all the way back. All right, and what's it doing now? Well, we had a brief breakdown below 71.82. All right, and this is, we talked about this in the last blog post about trading the weekly charts, that not necessarily by trading the weeklies are you going to avoid all the whipsaws, because you can see it here. All right, if I was in this trade, probably would have had my stop around 71.82. Sure enough, that got pulled back or broken on the pullback, just to watch the stock go up again. And now here we are again. You can see those 4 wicks, 5 wicks actually, and I'll point those out in 1 second. If we zoom in a little further, you can see 1, 2, 3, 4, 5 wicks on the upside. Sure enough, here we are breaking to the upside, and new stop area for me would be right here around 72.50. And one other caveat that I will say here is a lot of times I try to add or trail stops on new breakouts only, not just consolidations, because this is a typical pattern. You'll have a consolidation, you'll have a quick breakdown, and then you'll have a quick recovery. So if you were sticking to that mentality, you would have never trailed the stop here. Okay, and maybe you would have still been in it from 72.46. Again, either way, just pick a process, pick something. Just do something and continue to do it. As I said from the beginning, I will I have mentors that I pay for, different subscriptions, and that is one thing that's engraved throughout, is just stick to a process. Whatever it may be. It's not that one is better than the other. Just stick to a process and continue to do it. And I've done that with the weekly trading. I'm having difficulty doing it with the daily, and it is what it is. It's something different for me. It's not something I'm not used to, but I have to stick to a process. I have to continue to work at it, and eventually I feel like I will be as good as I am with the weekly trading. I personally like the weekly trading better. I like not having to manage these trades, and just letting them work and seeing a nice 20, 30, 40% win on my P&L. So with that said, that's it for this one. If you guys want to head on over to that Jackrabbit Club, as I said earlier, go to the website jackrabbittrader.com, sign up for the newsletter, and you'll get those videos. Other than that, have a great rest of the weekend. We'll talk to you soon.